Alrighty, guys, we're seeing so many changes in the market, and today we have Mark Abdallah joining us from John G. Ullman and Associates. So, Mark, what's happening so far in the market since it's been changing?
Year to date, the market's up. The market's done well overall, albeit with a lot of geopolitical uncertainty. There's been a lot of events year to date in terms of geopolitics. We saw a potential acquisition of Greenland, which created uncertainty in Europe. And we also saw some activity in Venezuela with their president Maduro being removed. That created some uncertainty as Venezuela produces a lot of oil. And right now we're seeing some volatility in the Middle East with potential military intervention in Iran. Iran's a major oil supplier. There's a lot of oil that is transported outside the region of Iran, with the Strait of Hormuz being there, and that can impact the price of oil. So we're seeing the price of oil increase a little bit. Oil and gas companies are doing well. Energy companies are doing well. Technology is mixed. Technology had a great year last year. We're seeing some companies sell off this year to date, but overall the stock market is doing well.
And with all of these changes, how strong would you say the market is right now?
Well, the market is pretty strong. I think with all the changes we're seeing, it becomes very important to pick the winners from the losers. So we are seeing some companies sell off as they've overspent, perhaps, and now earnings are being compressed, while we're seeing some other companies that have managed their resources very well, that are seeing strong demand. Those companies are pulling the market up. So, for example, Seagate Technology, they're a company that makes memory chips that they supply to data centers. They've seen very strong earnings. They're helping to pull the market up. Corning Incorporated is seeing a lot of demand from data centers as well. They recently beat expectations on their earnings. They're doing very well in terms of their stock price. So they're helping to lift the market up, while other companies, such as Oracle or Microsoft, have really spent a lot of money on data centers and the build out there. And with that, that's putting pressure on earnings, and those companies have sold off.
Companies are helping the market, but what are some of the economic factors that are contributing to the market?
Yeah, some key economic indicators are the unemployment rate. That's at 4.4%, so that's ticked up. That's a key monitoring point for the market. The inflation rate is another important indicator that has come down to 2.7%. And then GDP growth that continues to grow at a steady rate. Those are key macroeconomic indicators that help to drive the market.
And Mark, my final question for you, which market indicators are actually worth paying attention to right now?
I think the real important market indicator is market sentiment, because we talk a lot about earnings and what companies are doing, but it's really the price to earnings ratio that can drive the market. If that price to earnings ratio expands and we have high prices over earnings, the stock market will do very well. If sentiment comes down and people are pessimistic about the future, then that price to earnings ratio comes down along with the stock price, and that will weigh on the market.
Alrighty, thank you for joining us today, Mark.